Today, we're looking at 3 Caribbean countries: Guyana, Jamaica, and Trinidad and Tobago. The big question is simple. By the year 2050, which one of them will be on top? Are we talking about Guyana, the fast-rising oil giant? Jamaica, with its large economy and possible future oil reserves? Or Trinidad and Tobago, a country that's already been wealthy for decades thanks to oil and gas? To find out, we're going to break it down using 2 main measures: total GDP, which shows the size of the economy, and GDP per capita, which shows how wealthy the average citizen might be. Now, before we jump into the future, we need to understand where these countries stand today. Right now, Guyana is the fastest growing economy in the entire Western Hemisphere. Oil discoveries in the last few years have turned the country into an energy hotspot. Guyana has a very small population of under 1 million people, so the oil money spreads across fewer people. That means GDP per capita shoots up fast. Trinidad and Tobago, on the other hand, has long been considered one of the richest countries in the region. Its oil and gas sector built up wealth over decades, and even though production has slowed, its income levels are still much higher than most of the Caribbean. And then there's Jamaica. Jamaica has the largest population of the 3, sitting at about 3 million people. Its economy is more diverse, based on tourism, services, bauxite mining, and manufacturing. Growth has been steady but slower compared to Guyana. But with recent talk about oil exploration, Jamaica could be a different story by 2050. So the starting point is this: Guyana is rising, Trinidad is stable but aging in its energy sector, and Jamaica is big, steady, and possibly about to add oil to the mix. With that foundation, let's walk step by step through how each of these countries might look in 2050. Let's start with Guyana. This is the country everyone is watching right now. Since 2015, oil discoveries offshore have completely changed Guyana's future. Production is scaling up year by year, and by the 2030s, Guyana could be producing well over 1 million barrels per day if projects stay on track. That would make it one of the largest oil producers per person anywhere in the world. Here's why that matters. Guyana has fewer than 1 million people. Compare that to oil giants like Nigeria with over 200 million people, or Brazil with over 200 million people as well. In Guyana's case, a smaller population means the oil wealth, when divided, results in very high GDP per capita. By the 2030s, Guyana could realistically see income levels jump into the high-income category, something that very few Caribbean nations have achieved. But the big question is, how well will Guyana manage this wealth? Oil money can change a country fast, but it also comes with risks. If the government saves and invests wisely, building infrastructure, schools, and healthcare, then Guyana's long-term future is very strong. A sovereign wealth fund can help save money for future generations and prevent overspending when oil prices drop. On the other hand, if the country spends too quickly or corruption drains resources, the wealth may not reach ordinary citizens. Now let's think about Guyana in 2050. Oil production should still be significant, though not endless. If the government has invested in other industries like agriculture, manufacturing, and services, then Guyana won't just be an oil country. It will be a balanced economy with high incomes, strong exports, and a well-developed society. That's the best-case scenario. In that scenario, Guyana could lead the entire Caribbean in GDP per capita and still be competitive in total GDP, even with its small population. The worst-case scenario is different. If the oil money is mismanaged, the economy could face problems once production slows. Without strong institutions and good investment, the boom could fade. By 2050, Guyana could be either a shining success story or a warning about wasted opportunities. Which path it takes depends on governance and leadership decisions in the next 20 years. Now let's move to Trinidad and Tobago. Unlike Guyana, Trinidad is not new to oil and gas. It has been an energy producer for more than a century. Oil, natural gas, and petrochemicals built its economy, making it one of the wealthiest countries per person in Latin America and the Caribbean. Its GDP per capita has often been double or triple that of most neighboring islands. The energy wealth also gave Trinidad strong infrastructure, industrial development, and skilled workers in engineering and energy-related fields. But the challenge for Trinidad is clear. Its oil reserves are aging. Production has declined from past highs. Natural gas exports are still strong, but competition is growing. If new reserves are not discovered, the energy sector may not be enough to drive big growth by 2050. So, what does Trinidad do? The answer is diversification. Trinidad already has an industrial base and energy know-how. It could use that foundation to expand into manufacturing, financial services, digital technology, or logistics. The country's location in the Southern Caribbean also gives it access to South America and North America, making it a possible hub for trade. If it invests in these areas, it can keep GDP per capita high and stable, even if oil production declines. By 2050, Trinidad could still be one of the wealthiest countries per person in the region, even if its total GDP doesn't grow as fast as Guyana or Jamaica. Its smaller population of just over 1 million people works in its favor here. With the right policies, even moderate GDP growth can keep per income high. But if diversification doesn't happen and energy production falls sharply, Trinidad may see slow growth and fall behind in the rankings. So for Trinidad, the story of 2050 depends less on big oil discoveries and more on how well it transitions into a more balanced economy. The foundation is there, the skilled workforce, the infrastructure, and the institutions. The question is whether leaders take the steps to prepare for a post-oil future. Now let's turn to Jamaica. Jamaica is the most different of the three. It has the largest population, around 3 million people. Its economy is mainly based on tourism, services, and industry, with bauxite mining and agriculture playing smaller roles. Unlike Guyana and Trinidad, Jamaica is not an oil producer today. But there has been increasing discussion about possible offshore oil reserves, and some believe drilling could begin by the 2030s. So what would that mean for Jamaica? If Jamaica starts producing oil by the 2030s, then by 2050, the country could be in a very different position. Total GDP would grow significantly because the oil industry would add exports and government revenue. But here's the key difference. Jamaica has a much larger population than Guyana or Trinidad. That means GDP per capita will grow more slowly because the oil wealth is spread across more people. Jamaica could become the largest economy in total GDP, but still have lower GDP per capita compared to Guyana and Trinidad. Even without oil, Jamaica has a strong base in services. Tourism is a reliable earner, though it can be seasonal and sensitive to external shocks. Call centers, logistics, and digital services are growing, giving Jamaica new opportunities in global trade. If the government invests in infrastructure, education, and technology, these sectors could become even stronger by 2050. That would make Jamaica less dependent on oil, even if reserves turn out to be smaller than expected. So by 2050, Jamaica has two main scenarios. In one, oil production is large and helps boost total GDP, making Jamaica the biggest economy of the three. In another, oil production is small or doesn't happen, but services and tourism continue to grow steadily. In both scenarios, Jamaica's larger population keeps GDP per capita lower than Guyana or Trinidad. But in terms of size and influence, Jamaica could be number one. So let's compare the three directly. In total GDP, Jamaica has the biggest potential if oil production takes off. Its large population and diverse economy give it the scale to surpass both Guyana and Trinidad. Even without oil, it can remain competitive because of its service sector. Guyana, with a smaller population, can grow GDP rapidly, but won't match Jamaica in size. Trinidad will likely stay stable, but its growth will depend heavily on diversification.
In GDP per capita, the story is very different. Guyana is the most likely leader here. With huge oil income and a small population, its average income per person could far exceed both Jamaica and Trinidad by 2050. Trinidad would likely be second, maintaining high per income if it diversifies successfully. Jamaica, with its larger population, would probably be third in GDP per capita unless its oil discoveries are much larger than expected. So the outcome depends on what we measure. If we're looking at total GDP, Jamaica has the edge by 2050. If we're looking at GDP per capita, Guyana has the strongest chance to lead. Trinidad is stable in the middle, wealthy per person, but not the largest economy overall.